Well, a very good evening and thank you for joining us on India Business Hour. I'm Ashmit Kumar and here are the headlines that we're tracking at this hour. Stock markets rise for the fourth straight week. Nifty is now 61 points away from a record high. Financials lead with gains, mid-caps outperform. Cognizant's new CEO Ravi Kumar says some sectors, including financial services, have fallen off a cliff and that has impacted discretionary spends. The company makes structural changes to save costs and plans to move work to Tier 2 cities. Also has eyes on acquisitions to plug capability and geographic gaps. That's a CNBC-TV18 exclusive. IT major TCS and insurance provider Transamerica mutually call off a $2 billion 10-year contract ahead of schedule. IT stocks take a hit as it raises concerns about potential deal closures for other companies. Shares of HDFC Life rally in trade. CEO Vibha Padalkar expects growth in the mid-teens along with steady margins. Says the HDFC merger will boost credit life business. That's another exclusive. Government plans to widen the ambit of Prevention of Money Laundering Act, wants lawyers to report dubious transactions by their clients. Bar Council confirms receiving this proposal. Lawyers worry about potential damage to attorney-client confidentiality. India is all set to get integrated into the global defense supply chain, says India's US Ambassador Taranjeet Sandhu. Also adds that technology will be the focus of discussions with US as Prime Minister Modi gears up for a state visit starting next week. Sources tell CNBC-TV18 that a blueprint for the GST Appellate Tribunal may be formalized when the council meets in July. Sources say that the centre is looking to formalize the Appellate Tribunal by year end. Government to continue with measures to manage wheat price and stock even as headroom for market intervention shrinks. Defence move to bar states from open market sales and to impose stock limits. Manipur continues to remain tense as ethnic clashes continue. Union Minister R.K. Ranjan Singh's house in Imphal set on fire by a mob. Thousands reportedly gathered outside his residence and hurled petrol bombs. Cyclone Biparjoy leaves a trail of destruction across coastal Gujarat. Large parts of Kutch and Saurashtra regions inundated. About 1,000 villages are without electricity. Red alert declared in parts of Rajasthan as the cyclone weakens and moves inland. Microsoft co-founder meets Xi Jinping in China. State media quotes President Xi Jinping saying that Gates was the first American friend he had met in Beijing this year. Gates' visit comes a few days before U.S. Secretary of State Antony Blinken's visit to China. Well, let's start with the day's market action. Sensex and Nifty gained for the fourth straight week, with Nifty closing less than 61 points away from its all-time high. Both Sensex and Nifty ended the day at record closing highs. Financial stocks led with gains and mid-caps also outperformed. Surbhi Upadhyay gives us a quick wrap of the day's market action.
Well, what a solid show of strength by the bulls today. India in sync with the global rise in equities that we've seen. And what we saw was a very green, very vibrant screen cutting across the entire spectrum. That was the one key facet of trade today, that this wasn't about one or two stocks taking the index higher. It was across the board. It was large caps, it was mid caps, and banks came back with a bang. Thursday was a bit of a wobble. And a lot of people in the market got worried with the Thursday slide on the Bank Nifty. But guess what? The Bank Nifty decided to roar back into action, going above the 20 DMA level once again. And it was really leading the market right from the front. And we saw that in the likes of ICICI Bank, Kotak, HDFC Bank and the likes. Speaking of financials, life insurance stocks were a big sort of magnet area for the market as well. Big draw coming in, positive commentary from HDFC Life with the interview that you saw right here on CNBC-TV18. And we saw very big gains between 2% to about 4-5% on some of these life insurers. The only niggling worry for the market was really IT after the deal cancellation that we heard from TCS. But that was also pretty okay. I mean, it was well digested by the end of it. So IT was slightly down. The mid-cap party is really what we're talking about. The mid-cap index not to be left behind at all. Solid advanced decline ratio. And just the kind of stocks, you had a Mazgaon Dock, Garden Reach Shipbuilders, Kalyan Jewelers, Walk Hard. It's just a long, long list of winners. And when we're talking mid-caps, let's not forget today's sizzling IPO, the big debut coming in from EQ Lighting, really lighting up the street with a gain of 40% plus. So what lies ahead? the narrative seems very, very optimistic. Global markets seem to have taken a view that central banks will be on a long pause. We're expecting more policy stimulus from China and expectations that more FPI money will come into India as some of this money moves away from China into newer markets. And finally, of course, the progress of the monsoon will also be tracked with hopefully the cyclone now behind us. So all in all, just about 50 points away from the all-time high level on the Nifty, and the bulls believe that it can very well happen in the coming week.
Well, on to a CNBC-TV18 exclusive. Cognizant's new CEO, Ravi Kumar, has said that the financial services sector has fallen off a cliff, and that has impacted discretionary spending. In a conversation with CNBC-TV18 Shireen Bhan, he revealed that the IT major is making structural changes to save costs and is considering moving work to Tier 2 cities. Under his leadership, Cognizant is also eyeing acquisitions to plug capability and geographical gaps. That's not all. Ravi Kumar also listed out their three-pronged strategy to boost growth.
First quarter, first earnings which I actually had for me, we had 28% increase in bookings, Y-on-Y. 30% of those bookings came from large deals. So we've created a lot of outreach on large deals. And we've created a lot of infrastructure inside the company to cater to those large deals. The second is we want to be an employer of choice. We are a big employer in India. We want to be an employer of choice. Our attrition rates have started to fall since the last...
30% down to about 23%.
It's fallen last quarter, and the trend is looking good. The third, which is what I did in my earnings, is have operational discipline and simplify our operations. So what I did was I announced a program called Next Generation,
right,
where I'm taking out cost.
Yeah.
And I'm actually transitioning my real estate to Tier 2 cities in India. There's no change in my narrative since what I have said in May. Some sectors are impacted or discretionary spend, and it's also falling off the cliff in some places.
Financial services?
Financial services is the sector. Of course, we have a huge presence in healthcare. In fact, our healthcare economy is one of the largest in the world. Between healthcare, health equipment, devices, life sciences, we are the biggest provider. That is resilient to economic cycles. Overall, I'm seeing a lot of large deals. I think this is how the market is evolving, and I'm hoping that the progress we've made so far, as well as what we are planning to do for the future, I'm very hopeful that we could bring back the growth mindset. 50% of my free cash we use for acquisitions. That's the stated policy. I have not changed that policy. I think acquisitions have contributed well to digital capabilities and gaps which we had, and we've always used that as a way to fill the gaps. I'm going to continue to look for meaningful, purposeful acquisitions.
And well, you can catch that entire conversation right here at 9:30 p.m. Well, IT major Tata Consultancy Services and insurance provider Transamerica have mutually called off a $2 billion 10-year contract ahead of schedule. Both companies have cited the current macroeconomic scenario and respective business priorities as the reasons behind terminating this deal. The news hit other IT stocks as well, as the market feared more deal cancellations. And shares of HDFC Life rallied in trade today, and this comes after the company reported a strong performance in FY23 and expects margin to remain steady. Speaking to CNBC-TV18, the company CEO, Vibha Padalkar, said that they expect growth for the current fiscal year to be in the mid-teens. She also said that the company expects a 30% growth in the credit life business.
So last year we had a phenomenal, last 2-3 years we had a very good trajectory on annuity. Last year we grew about 50+%, and then on a receipt premium basis it was about 18%, while the industry grew only by about 2%. So there also, and thereby market share increase. No longer is it difficult to buy annuity. Plus some of the structure of products wherein a pension plan or with the government, you have to, it culminates into an annuity.
Into that product.
So a combination of the structure, how socio-economic change, demographic changes are happening like you mentioned, and products, and we now have a lot of innovation in the space of annuities, means that I would expect this to grow in comfortable double-digit numbers that are faster than company level growth.
quick questions. One is, if there is any impact of the taxation announcement, then the companies will have to grow their protection portfolios significantly and focus on that side. For you, where does protection stand as a part of the product mix? What kind of growth do you see for the next 2 to 3 years in the protection portfolio? And with that growth, what kind of share would it take if we see 3 years in future as a part of your product mix?
So we see protection as one cohort comprising credit life, which is nothing but pure protection on a group avatar, and retail protection. I'll talk about credit life first. Credit life has been growing in the range of between 40% to 80%. We expect growth to be at least 30+%. I'm fairly hopeful. If you look at the 2 months data that is in the public domain, you will see that for HDFC Life, the retail sum assured growth has been upwards of 50%. So that growth in terms of retail protection is back, and even credit life is back. So I would expect this to see.
Well, after imposing stock limits on wheat for the first time in 15 years, the government also decided to exclude states from the open market sales until the end of December. Sapna Das now joins us with more. Sapna, tell us, why did the government resort to such a move?
It's probably a demand-supply mismatch where the market has been able to read into it. So if you look at the current wheat stock position versus the buffer norm requirement, so 309 LMT worth of wheat stocks against a buffer norm of around 276 LMT for July. You have a headroom of around 33 LMT, out of which some portion is also going to be utilized for the open market sales. So as far as the official data is concerned, this appears to be a pretty neck-to-neck situation. Second, of course, in terms of procurement of wheat has been lower this time as against the estimates given by states. So the estimates given by states were around 341 LMT worth of wheat procurement, but that has been around 262 LMT. So that is also another reason which has probably put pressure on pricing. Last but not the least, in the last couple of years, the government has also done massive sales under the Pradhan Mantri Garib Kalyan Yojana. So historically, there was a pressure on wheat stocks for quite some time. We just spoke about procurement by states, basically, or rather estimates given by them. So many of the states have really not come forward because the prices have been very high. Farmers have chosen to give their wheat stocks to private traders. For example, UP and Rajasthan, there has been very minimal wheat procurement by them, not just in this Rabi season, but in the earlier season as well. And now the procurement season is over. From here onwards, the stocks are going to start depleting. So keeping all of this in mind, the government has taken these few important decisions like stock limits and excluding states from the open market sales, because in any case, states have also not been procuring, during the procurement season. And this is going to be a bit of a challenge if your stock position continues to be like this. So these kind of firefighting measures as far as stocks and pricing for wheat is concerned are likely to continue for some time.
Right, Sapna, thanks a lot for that. Now, the government has moved to widen the ambit of money laundering laws in the country. The centre plans to make lawyers report dubious financial transactions by their clients. However, lawyers have expressed their concerns, saying that this move could damage attorney-client confidentiality. Now, sources from the Bar Council have told CNBC-TV18 that they have received a letter from the government proposing this change. I caught up with some legal experts on how this change could impact lawyers.
If you are involved in the process of company formation, if you have been the initial director of the company, etc., you are sort of almost regarded as the person who's carrying on that business for the client, which may actually be only a service and nothing else. And for you to be regulated on that basis, for the reporting requirements to come in a situation like that may not be appropriate. Important thing is the law. But the way, as I said earlier also, the way the notifications are worded, and if that ambit is very, very broad, then we are going to see practical difficulties in implementation, etc., not otherwise.
See the recommendations of the FATF. They had clearly identified, amongst others, lawyers also to be included. So from that perspective, I don't think it's surprising. I think it's also important to put this in perspective because when we look at other major jurisdictions, and specifically UK, Singapore, New Zealand, and the EU, they already have some level of both KYC and record keeping, which is obligatory in the context of lawyers.
Well, Prime Minister Modi will be heading to the United States for a 3-day state visit next week. He US President Joe Biden is set to conduct high-level talks with Prime Minister Modi, and the nations are expected to ink a deal to enable General Electric and Hindustan Aeronautics to make fighter jet engines in India. Now, sources say high-level meetings have been scheduled to pave the way for closer linking of supply chains on traditional industries and new critical and emerging technologies. Parikshit Luthra now joins us with the details. Parikshit, take us through Prime Minister Modi's agenda.
Prime Minister Modi is heading to the United States for a state visit. He will be the third leader who will be hosted by President Biden for a state visit. In New York, Narendra Modi will lead International Yoga Day event at the UN headquarters on the 21st of June in Washington, D.C. Prime Minister will receive a ceremonial welcome at the White House on the 22nd of June. He will be meeting President Biden for a high-level dialogue. Thereafter, he will be hosted for a state dinner by President Biden and the First Lady as well. Prime Minister Modi will be addressing a joint sitting of the US Congress. This would be the second time that Narendra Modi would be addressing the Congress. On 23rd, US Vice President Kamala Harris and Secretary of State Antony Blinken will host a lunch in the honor of Narendra Modi. The Prime Minister will also be meeting leading CEOs, professionals, stakeholders and members of the Indian diaspora. He will be addressing the Indian diaspora in Washington, D.C. on 23rd evening. Among the deliverables would be, in defense sector, a multi-billion-dollar GE-HAL deal for co-production of jet engines. The deal could include up to 80% technology transfer to HAL. India is also buying 30 MQ-9 Reaper drones for $3 billion on critical and emerging technology, especially India-US semiconductor supply chain partnership. India will announce a collaboration with the United States on manufacturing, skilling, design and research in semiconductors. According to reports, Micron may announce a $1 billion investment in semiconductor packaging in India. Agreements are also expected on deployment of 5G, 6G, Open RAN, quantum computing and AI.
We are looking at what I will say is a much beyond a buyer-seller relationship. Actually, we are being integrated into the global defense supply chain, and the leverage of India's comparative advantages and that opportunity in defense industrial collaboration, especially here in innovation, co-development and co-production. India is an emerging powerhouse in technology. Obviously, defense will be one of the areas which will be touched upon.
Welcome back. Now, the GST Council has been scheduled to meet on July 11th, headed by the Finance Minister. Sources have told CNBC-TV18 that a blueprint for the GST Appellate Tribunal may be formalized during this meeting. Shivani Bazaz now joins us with more details. Shivani, take us through the agenda.
Well, sources have told CNBC-TV18 that the GST Council is looking to formalize a blueprint for the GST Appellate Tribunal in the upcoming meeting in July. Finance Ministry sources have told us that while most of the work on the tribunal blueprint has been done on the centre side, amendments need to be brought to the SGST laws of states. Sources have said that the government is looking at the end of this year as a timeline for the formalization of GSTAT. Remember, GST Appellate Tribunal is a body meant to deal with tax disputes. The need to have a GST Appellate Tribunal was discussed in the last GST Council meeting as well, and the Parliament had passed the Finance Bill 2023, which included amendments pertaining to the formation of GSTAT in March. Sources suggest that the final contours of the tribunal are likely to be discussed in the upcoming GST Council meeting in Delhi. Other items that are likely to be on the agenda would be GOM report on online gaming and betting, reconstitution of GOM and rate rationalization, and measures to tackle fake input tax credit. GST on cement is unlikely to be on the agenda this time around.
Well, Patanjali Foods has launched a new set of offerings in the premium segment category today. Patanjali Foods CEO Sanjeev Asthana said that the company is now aiming to establish a large platform with its premium products. Here's that conversation.
We are very large in the value offering, and of course we had several premium products as well. But this is an effort to build up a large platform of premium product offering that we have. So today we've done the sports nutrition based products which we're launching. We've got millet based products in the biscuits category, and we've got a dry fruit range which we're offering under Nutrella. And all of them are with an idea to develop a big, strong Nutella brand range for the company.
So also speaking of the palm oil plantations which were being spoken about, how is the work going on with respect to that? India is looking at reducing its import dependence and becoming not just self-sufficient but also an exporter. How is the current work slated like, and are there plans to expand them further to even fertile and arable areas? Because it was stated in the press conference that right now even non-fertile land is being deployed.
So oil palm mission that was organized and declared by the government of India under National Mission on Edible Oil Palm is a very large project where more than 12,000 crores has been given with very new and unique features, which is very supportive to the oil palm. So that is under works right now. We are planning to do 500,000 hectares under that project, and we've signed agreements with 12 state governments, 5 in Northeast and 7 in the rest of India. But the big action states for us are clearly Andhra, Telangana, Assam, the other states in Northeast like Arunachal and Mizoram, Nagaland, Tripura. Our high capex is going to be more back-ended, which is when we have to set up the FFB processing units in oil palm, which are going to be almost nearly 1,000 crores, but in year 4 and 5. And right now, each year, we are targeting about 100 crores of capex that we are going to spend on the business. Our targets are ambitious. We are growing currently. This year, we did about 6,000 crores plus in FMCG portfolio. Target next year is close to 7,500 crores plus. And in the fullness of time, we want to continue growing between 15 and 20% year on year.
Well, in national news now, Manipur continues to remain tense as ethnic clashes continue. Union Minister R.K. Ranjan Singh's house in Imphal was set on fire by a mob last night. It is claimed that thousands gathered outside his residence and hurled petrol bombs. Well, Cyclone Biparjoy left a trail of destruction across coastal Gujarat after its landfall. Last evening, around 1,100 villages and dozens of towns lost power as the cyclone uprooted electricity poles. The Met Department has said that the intensity of the cyclone has reduced to severe. It has also issued a red alert in parts of Rajasthan as the cyclone moves inland. Vinaya Deshpande reports from Dwarka.
We are here in Dwarka, and right now flood conditions are experienced at several locations. If you talk about the coastline of Gujarat, over 19 lakh people have been affected due to the impact of Cyclone Biparjoy. Over 1 lakh people continue to stay in rescue centers where they have been kept. Livestock has been affected as well. Fortunately, there has been no casualty that has been reported through the landfall of Cyclone Biparjoy, but there is loss of some livestock that has been reported, and 23 persons are reported to be injured. As of now, state government says that it will take some time to restore normalcy. Electricity supply remained disconnected at several locations across the coastal districts, even as the wind speed started reducing slowly through the evening today. We expect that the cyclone, which has already had a landfall, is now moving inwards and will possibly cross Rajasthan as well in a few hours from now. So as of now, situation not yet back to normal, but we slowly expect that normalcy will be restored. Rail, road and air traffic will be restored soon as well.
Well, with that, it's a wrap on this edition of India Business. Thank you so much for watching. News and updates continue right here on CNBC TV 18.